Hello traders, welcome back to my YouTube channel. I hope you are safe. I hope you are doing well. I hope you are catching error as usual. As you start here with a brand new video to help you to improve your trading skill. So in this video, I'm gonna be teaching you a step by step or 3 step where you can get the right order block. Let's get into it. So first thing, when I look for order block, there are 3 things that I look for. I want an order block that broke structure or give change of character, and also I look for order block that line up with the discount zone or a premium zone, and also order block that took liquidity, or order block that should take price should actually take liquidity before tapping the order block. So I'm going to explain all this step on the chart right now, and I'll show you how it works. The first thing when you hear about order block is that they are actually supply or demand zone that price can buy or sell from. If you have a bullish trend, price will always tap, or most of the time price will tap a demand zone to buy to the upside, and this demand zone are actually called order block. So this is how you can use for the demand, and you can use order block for demand zone. And the same thing if it is a supply zone, the order block also called supply zone, so you can sell from those bearish order block or supply zone, so you can sell from them. But sometimes if you want to sell from them, you can maybe have you can maybe have a lot of order block. Let's say one order block here, we can maybe have another order block here. So you'll be like, which order block do you think has a high probability to play out? So this is exactly what I'm gonna explain in this video. So the first thing is, I want my order block to break structure. What I mean by breaking structure is, if you have a bullish trend, price will give you a break of structure like this, give you a pullback, give you a break of structure. So this is my break of structure I'm looking for. This one is what I call by a break of structure. Break of structure, yeah. So this is a break of structure, this is a pullback, this is a new break of structure that's going to be created. So this is the next break of structure. So for me to be able to maybe take a buy from, let's say there is a demand zone here that I want to buy from. If I want to buy from this demand zone, the first rule is, I want this demand or this order block to break structure. Like price from this, it buys and it breaks this previous high. If price does this, then I know this order block is valid for me. So this order block broke structure. From breaking structure, I know that now price will have to give me pullback to my demand zone or my order block, and I buy to the upside. And I can go to the chart right now and show you how it works. I want price to break structure before giving me pullback. If you look at this, price is bullish, you have this expansion to the upside, you have this pullback, you have this expansion to the upside, you have this pullback, and keep happening again and again. Okay, and let's say from here, you see price started buying here, broke the previous high, which was this one. From here, I want price to give me a pullback before buying to the upside. And what I mean is, if price has to give me a pullback before a new buy to the upside, I need price to break the previous high, or I need any order block that actually broke structure. First thing, I want price to break the previous high, which did happen here. This high, price broke it, now it's gonna give me pullback and buy to the upside. And I want any order block that is before the break of structure. If I have another block here, let's say I have another block here, and if it was before the break of structure, then for me it's a valid order block. If I have this order block here, if it is before the break of structure, it's a valid order block for me. So let's say if I get this order block here, this order block, yeah. So if I get this order block, the reason is valid is, from this low, price bought and broke the previous high, which was our break of structure to the upside. As I got my break of structure to the upside, and this order block was the last order block before the buy, then this is going to be my demand zone, or this is going to be the right order block I'm looking for. And order block can be it's not always a sell for a buy. Sometimes you can have some doji candle like this one. This is a doji, and dojis are also order block. So if you see this demand zone or this order block, from this order block price bought and broke the previous high or previous structure. From breaking this, I know that this low should be a strong low for me, which is like another block. I don't want to see price going below this low. Like price should not go below this low. So if you have to take trade based on this order block, there is this last sell before the buy that actually broke structure, then you get your buy from this area. It depends if you enter with confirmation or not. So if you, let's say if you enter without confirmation on this course, you have your buy from this area, and your TP was just the previous high, this previous high here. From breaking the previous high, you can maybe look for others order block that actually broke structure, and you can keep buying it to the upside. So this is the first rule I look at order block. And you might tell me, if I come here, you can see that we have let's say you have one order block here that didn't play out. You see one order block here didn't play out. You can tell me, yeah, it broke structure to the upside, but it actually didn't play out. And the fact that it didn't play out is there is actually a reason, and I'm going to tell you in the next step. So if I come here, the next step here is order block at discount and premium. So I want my order block to line up at a discount zone or a premium zone. So if I come here, from this low to the high, I want to take my fib tool, my fib from the low to the high. When I put this, I want my order block to be below the 50%. If the order block is above 50%, I will not take a buy based on, because it's not actually a discounted for a buy. I want the order block to be below the 50%, which will be a discounted price for me so that I can buy from. So if I look at this, if I have to use the rule of breakout structure and also below the 50%, if you see, let's say if you get this order block, some people they can say this one as an order block, okay, but this one for me is not like a valid order block. The reason is, the first reason, I want this order block to break structure. It didn't break this major structure, it didn't do that. As it didn't do this, for me this order block is not valid. So this is one of the reasons it didn't play out. Second reason is, I want this order block to be below the 50% for a buy, but this one is above the 50%. So this is the second reason why this order block is not valid. And now the only order block which are actually valid for me is this order block here. You have this order block here and this order block here. These are the two order blocks that I can actually have a buy to the upside. And the reason why this one didn't play out is going to do on the next step, the last step. This one is for the buy setup. Let's look for a sell setup. You see price dropping here. I'll try to get an example right now if I can get anything. Okay, if I come here, you can see that price broke this low. Let's look at this low. Yeah, you see, you can see that price created this low and is giving us the pullback. So from here, I have to use the same step as the one I just did right now for the buy setup. I take my fib from the high to the low created. Once price giving me pullback, I want to get any order block above the 50%. This is one of the reasons, above the 50%, and it should break structure. So if, let's say my breakout structure is from this area, right, anything below this zone is not a valid order block for me. You can maybe see this one as an order block. See, this one is another block, but it didn't play out. The reason it didn't play out is actually it didn't break any major structure. This is the first reason. Second reason is isn't the second reason is not even in a premium zone for a sell to the downside. So these are the two reasons you can have. And if something I can add, I want order block which is not yet mitigated. If you want to take a trade based on another block, you want the one which is not yet mitigated. If I have this sell, this order block here, you can see that price pull back and tap it already. By tapping this, there is no reason to keep selling from this area. If you want to keep selling from this, it's kind of gonna become some support or resistance, because price will just come and drop down, come here, drop down, come like price. Most of the time, price just tap your order block once, which is already mitigated. If price comes back, maybe it's coming for another order block. So you look for the order block which is not yet mitigated. If I get maybe this one, I can see that price also pull back inside of it. You can see price pull back, tap it, and drop down. And even this one is not valid for me. So the order block which is valid, it should be above the 50%, not yet mitigated, and also broke structure. And the one I can see is maybe this one up here. See this one order block here, this one order block here. So this one of the order block that might be valid for me. And if you see, price came, tap, and drop down. See, price came, tap, and drop down. So this is how you can get the right order block based on the two steps. And the last step, which is also really important, is about liquidity. Order block that took liquidity, or price should take liquidity before tapping the order block. So if I come back to this one, so if I look at this, based on the two first steps, price will have to break structure before giving me the right order block, and it has to be below the 50%. And the two order block we got is this one and this one here. These are the two order block we got. From these two order block we got, now I'll have to identify my liquidity. That's the first thing I do. I look at this rally to the upside. I see if I can get some liquidity zone. Liquidity might be double top, double bottom, trend line liquidity, or anything sort of. So if this, sometimes liquidity you can go to lower time frame to see them well, or you can maybe look for another time frame to get them. If I come here, what happened here? You see price created what? Price created trend line liquidity. You have this first touch, second touch, and third touch. So by giving us this, we have trend line liquidity. And based on the last step, I want to see liquidity to be taken before a buy. I want this liquidity to be taken before actually tapping my order block, the right order block. So if this liquidity is below this order block, then this order block is not valid for me. The fact that it's not valid is if price has to drop and take the liquidity, meaning that price already broke this order block, and if price breaks it, any buy will gonna be taken out from this one. If you have a stop loss below this low, you get taken out. So if you have liquidity below a bullish order block, I don't use the order block. Don't just take it, because sometimes you might see liquidity below the order block. Sometimes it does play out, like sometimes it does play out, there's no problem. But something that you should understand is about probability. Let's say the probability of order block that has liquidity below for a buy can be, let's say 10%. Let's say 10% of the time price doesn't take the liquidity, tap the order block and buy. And if 10% plays out, meaning that 90% of the time doesn't play out, and you only want to get high probability setup when you trade forex, you really want to grow the account, because it's not because sometimes you see price does play out from this area, you said, I was seeing price looking maybe to buy from this area, why don't I buy it? It's all about probability. The probability for this thing to buy maybe is for the 10% or even 5%, even less than that. And sometimes maybe you can see 10 opportunities like this, one play out and 9 doesn't play out. And if you didn't take it, for sure you avoided 9 losses. And if you one of them play out, is fine, because it's a low probability. It's better if you have the high probability setup than having the low probability entry. So the best thing is you wait for the right zone. If price comes here and buy, no problem, you miss the setup, you can look for the next setup. And if price comes to your zone, then you look for your right entry and you get it. So any bullish order block that has liquidity below, I don't take it, because price will have to drop and take the liquidity. Price most of the time drops and actually take the liquidity. So this is one of the reason why I don't take a buy if there's liquidity below my zone or below the order block. I don't do that. But if the liquidity, let's look for this order block. This order block doesn't have any liquidity below here, because this is the last low that actually broke structure. This is the last low that broke structure, and there's nothing as liquidity below this zone. As there's nothing as liquidity below this zone and there is liquidity above this zone, then it's fine for me, because price will have to come take out the liquidity before tapping my order block and buy to the upside. So this is simple. I want price for a buy, I want price to come take the liquidity first, tap my zone and give me the buy. But if price will have to come tap my zone and there is liquidity below my zone, then I don't do that. So this order block, even if it broke structure and it is at a discounted for a buy, I don't use it because of this liquidity here. Don't do that. Like sometimes you might not see the liquidity if you don't go to higher time frame, but you have to scroll between time frames to actually get the right liquidity. And it is also the same thing, you sometimes have to scroll between time frames to get the right order block. This order block was on the H4, and now on H1 you can see that it's kind of messy here. There's really nothing as the right order block. So sometimes you have to scroll between time frames to get the right order block, and this might maybe be the topic of a next video. So you want this order block that actually broke structure and the liquidity is above, come take it and give you the buy setup. So this one is fine. And it's the same thing if you want to sell. If you have, let's say, a selling order block, I want price to give me the liquidity below the order block, something like this. So price will tap my order block here and there's the liquidity here, which price will have to take it. So this is the same thing. But if there's an order block below the liquidity, then I don't want it, because price can still buy, take the liquidity and take me out before dropping. So liquidity is really important when you come into choosing the right order block. Even if it is discounted, broke structure, look about the liquidity, because if you don't look at the liquidity, you can always get screwed with the market. So if I come back to this H4, I get back to the H4 for the sell setup. This one is the sell setup. Okay, let's see the reason why this was the only order block that was actually valid. But let's see, there were actually two order blocks. One, yeah, I can get one here that never got mitigated. I think price, yeah, price didn't mitigate it. So these are the two order block I can have. So the reason why this one is valid, I'll give it, and the reason why this one also is valid, I will give it. But I'll give all the reason. So first, I need price to take the liquidity before tapping my order block and sell down or buy up. So this is what I want to see. And if I see well, you see price created trendline liquidity here again. The same thing happened here. There's trendline liquidity created here. By price creating this trendline, I know that there is a reason for this thing to buy above this zone. So any order block, you can see there's another block here that didn't play out. It's actually above the 50%. You can see, you can get, yeah, you can get this one. So this one is actually above the 50%, and it actually broke structure to the downside. So everything is cool. The reason why this order block is not valid for me is there's liquidity above here. Price can still buy, take out liquidity before drop down. So I want price to take the liquidity before dropping, meaning that any sell setup should be above the liquidity taken. So this is the one sell setup, and this is the second sell setup. And now let's see if this one is really valid. So this one is really valid. I said price should take liquidity before dropping, or price should take liquidity before tapping my zone. So the liquidity is below the order block, and this is my zone where price can tap and drop. So this is already fine for me. But let me see if there's liquidity above this order block again, which is really, really important. If there's liquidity above this zone, price can still go higher again. So let me see if I get maybe this high here. If I have to read whatever happened here, you see that price did what? Price created this high. You see, price created this high and rally, took out the high, which is liquidity grab, and drop down by leaving us this order block. So by doing this order block somehow grab liquidity from the previous high and drop down. By giving me this one is the right order block for me. If there is a high, the price take it and give me an order block, then I'm going to sell from the order block. The order block that actually took liquidity. Because if there is liquidity taken, meaning that smart money bought before selling and broke structure. By doing this, I want price to pull back to mitigate the last buy before the sell, and the real sell can actually take place. And that's exactly what happened on this scenario here. Price created previous high. You see, price created this high, rally away, took everyone who is actually selling from this high, or you can actually see like a relative double top. So price took it out. This move is actually enough to take anyone out. And if you see, this one is h4. If you maybe try to go to lower time frame, this 13 pips, which is actually enough to actually take any stop loss. If anyone selling here, the stop loss can maybe be above this high, and the person takes stop loss. And from grabbing liquidity from this high and drop down, break structure, and there's liquidity to be taken here. So this order block for me is valid. Take liquidity drop and already took liquidity, so there is nothing as liquidity above this zone. So these are actually some of the things that you can use to get the right order block, and it works almost all the time. So all you have to do is you apply those simple steps that I just showed you right now, the 3 steps that you have here. Get an order block that actually broke structure or gave a change of character. I wrote change of character because sometimes you can get a reversal order block. Let's say a bearish trend, price give you a change of character, something like this. A bearish trend, price gives you a change of character, so you need a pullback for a buy. So this order block has to give you the change of character so that you can actually take the buy to the upside. So this one sometimes you can use for confirmation entry, and this trade breakdown, I'm actually showing how to get the right order block. And once you get the right order block, sometimes you still have to look for confirmation on lower time frame, and the confirmation maybe I'll get another video about it, but it helps you to get more RR, and also you can actually avoid some losses, because if no confirmation, it might just be a no trade scenario and price can keep dropping like this one here. So this is the thing, you need a order block that broke structure at a discount or premium based on the fib tool, and also another block that took liquidity, or price should take the liquidity before tapping the order block, which actually the value order block for. So these are the 3 steps, like the 3 easy steps that you can actually use to get any valid order block. And once you get it, then it's going to be easy for you to actually ride the remaining of the move. All you have to do is you take your trade, you target the previous high, and that's done. And if you look at, let's say, this scenario, anyone taking this sell, all you have to do is you target the previous low and price drop and tap the previous low, and that's it. And I think it's the same thing happened here. There's this previous high, this high here. If you take this buy, your TP should be this high, and let's see if price did hit TP. Yeah, and yeah, price did hit TP. So that's it. These are the actually the simple steps. So thank you for watching the video. If you like this type of content, try to subscribe to my YouTube channel and make sure you give me a follow on Instagram. Thank you.